So now that we went over time frame alignment, let's move on to mitigation blocks. So what is a mitigation block? Mitigation blocks are the bullish order blocks on the buy side of the curve in a market maker sell model, and the bearish order blocks on the sell side of the curve in a market maker buy model. So where smart money bought in those bullish order blocks, right? We're gonna use that same order block on the sell side of the curve to offload their orders and mitigate their positions. Right? We've got a Australian dollar, US dollar daily chart, and we see a clear market maker sell model forming over here with this original consolidation, right? Accumulation phase number 1, accumulation phase number 2, and eventually taking out external range liquidity and making the highest high in this curve. So after we break structure, we know we are going to go into sell side of the curve, highly likely, because we took out external range again, right? So we're expecting this bearish PD array. Now, where are the order blocks on the buy side of the curve? Those down close candles, right? Before my price moves up. So we're going to outline those bullish order blocks to the sell side of the curve. So we want to extend the bullish order blocks from the buy side of the curve into the sell side of the curve, because that's where smart money bought before, and now they will use that to sell. We want to pair the mitigation block up with a new sell side PD array. So as we just saw, a bearish fair value gap, we want the sell side PD array to be inside the zone of the mitigation block, and we'll outline in the chart how that looks like. So over here we outlined all those order blocks, right? The bullish order blocks on the buy side of the curve. Now we're heading into sell side of the curve, and we're going to outline this bullish order block to the sell side of the curve, right? So we want to see our new sell side array form around this area where we can use this as a mitigation block. So we can see this fair value gap here, right? We displaced lower and breaking structure. So this is a premium array which we can use to sell off from. So outlining this bullish order block to the sell side of the curve, right? Now we can see where we can mitigate our orders. So filling up this fair value gap, not quite fully, but we tapped over the 50% level and then we reject. So in the process, we're creating this bearish order block over here, right? And it's co-inlined with this bullish order block from the buy side of the curve. So now we have this layered, right? So now it's a high probability this area can be used to mitigate their orders. So this mitigation block coupled up with a bearish order block, and then we can find an entry on over here. Price keeps continuing down until we reach that internal range liquidity, right? Again, from external to internal, and then sell side of the curve with those mitigation blocks. We have another one over here and another one over here, which we can outline too. So we outline this bullish order block from the buy side of the curve into sell side of the curve, and again we are forming a bearish order block inside that old bullish order block, right? So we have old accumulation over here for buy orders, and now we have a new distribution for shorts to mitigate smart money positions. And lastly, this bullish order block extended out in time. We are forming what a new array, premium array over here, right? This fair value gap inside this old accumulation, did this bullish order block, and makes it even higher probable this will hold and we can continue down for that last push and completing that market maker sell model down here. Right, we've got a British pound Canadian dollar daily chart. We filled up a monthly fair value gap right here. Took out these daily sell stops down here, so we went from external to internal. What does that look like on the 1 hour chart? So with the start of a market maker buy model, we need an original consolidation, right? Over here we've got that original consolidation. Accumulation phases down here until we reach that higher time frame key level. Smart money reversal down here, and now we're going to use those bearish order blocks on the buy side of the curve, right, to mitigate those positions. So we have mitigation blocks for the buy side of the curve. So outlining this bearish order block down here, extended out in time, and you can see a PD array has been formed over here inside, which is a fair value gap, right? So you really want to see those new arrays form inside that old accumulation over here. So bearish order block being used to co-inline with this fair value gap, and hence you can send the price higher. Again, over here, another bearish order block extended out in time. And then what happens inside this area? We form another fair value gap, right? So we have another array which is formed inside that bearish order block, creating a mitigation block for their smart money positions. So here they were in sells, right? And now they can convert their sells into longs in that same area. And lastly, up here we have another one, right? Extending it out in time. We've got another mitigation block up here, right? A fair value gap has been formed over here, and then continuation to complete this whole market maker buy model. So really outline those old arrays from the sell side of the curve, extend them out in time into the buy side of the curve, and wait for your new PD array to form, and then it will be higher probable to take a trade from.